Good afternoon. This is Tom Alexander. It is Thursday, July 21st. The stock market cash sessions just closed. It's 4:24 p.m. Eastern Time. It's a rather dramatic day. I thought I would do a quick update before I head off to the gym. And this is sort of off the cuff, extemporaneous stuff. So if it's a little unorganized, bear with me, but I did want to get something out because today is a potentially very significant day. So, oh, and by the way, please, if you have not subscribed to the channel, please subscribe to the channel. I'm trying to get to 1,000 subscribers. I'm right at it. It would be very helpful. And I would very much appreciate it if you would subscribe, like the video, etc. Okay. Now let's look at the charts. Okay, here we go. And we're going to start with the SPX, the S&P 500. Today was a dramatic outside reversal day. We have taken out the range of the previous 5 days. We came down to the sixth day. I have had this level highlighted for some time. We came right down to it. This is a level of a gap. And I've also been mentioning that determining downside levels in this market, because it's so vertical, especially off of the low of the 16th here, would be problematic. Well, we really came down almost to maybe the most obvious level. But below here, we're looking down into this area here. There's no one magic print, but it's this general area here would be the next level down. How far down is that from tonight's close? About 2%. Today was what, a 2% drop? No, 1.5, a little bit more than 1.5 in the SPX. We'll look at the NDX in just a minute, it's a little bit more. But we've had several false starts to the downside since breaking out above this level here. But today is rather dramatic. Everything is down. NDX had its widest range down day, and it certainly outside reversal day this year, maybe in the last couple of years. And it's almost perfect. It's almost a perfect time for a top, because yesterday we had Microsoft earnings, we had Meta earnings, and they were great, and everybody was happy on CNBC and couldn't believe it, and it was wonderful, and AI is paying off, and now we have today. So it's almost a perfect environment for at least some sort of short-term top. All right, let's look at the NDX. And this is interesting. From today's print high, from the April low to today's print high, we were up only 42.6%. So why would we ever have a drop, right? Today is down from top tick to bottom tick. 1.73%. There's no obvious level here again, because this is so vertical. Maybe here, and then below here, the obvious level is this cluster of lows right in here. Now we go there, I don't know. The general guideline is, now if this is the real top, today's ranges in the SPX and NDX should not be retraced by even 50%. I mean, a 50% retracement would be about the maximum you would expect to see if this decline is real and if it is portending a top of relative significance. If we look at the other indices real quickly, the Dow, the Russell, all the other indices have been weak. They have not followed this ramp up of the NDX and XPX. That was sort of a heads up that something had to give. So the Dow is now in the middle of nowhere. There's a pivot low here. And then below there, you're, more elevator shaft. In the Russell, here's this pivot low below here, elevator shaft. Let's look at the equal weight S&P. It could not get above its all-time high here, stopped on a dime. Now we've had this big reversal. Let's look at the New York Composite. The New York Composite, which is a very broad index, showing a lot of weakness here. Now it was, when it broke above here and then we broke up again, things look really good because this is the broadest of the indices. This is all the stocks listed on NYSE, sort of reflective of overall market breadth, which brings me to, and I'll take a look at this tonight. I'm not sure, but NYSE cumulative breadth has been following the market, making higher highs all along. It's very unlikely that this is the all-time grand super cycle Armageddon top. Regardless of the magnitude of whatever retracement correction we have in here, whether it's another 2% or 8% or whatever, it's very likely that one or more of the indices before the end of the year makes a new all-time high. And I'm basing that on the fact that I don't recall a market top being made simultaneously with a new top with an all-time high in the New York Composite AD line. Okay. This could be the first time. If it is, so be it. Okay, let's take a look at the internals of this market. VIX, as one might expect, spiked up again today. It's at a multi-week high again. So it's elevated relative to recent trade, but by no stretch of the imagination is it elevated in the bigger picture. It's not even to 20 yet. Let's look at this. Look at the internals we keep. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. And this has been diverging for weeks, okay, if not months, really. And it's rolling over, a long way from any sort of downside extreme. So, guys, I would expect some sort of immediate follow through. It doesn't necessarily have to be tomorrow. I'd be a little bit surprised if tomorrow isn't down, and tomorrow has the potential to be a big down day, quite frankly. We shall see, as they say. I hope you guys have a good evening. And again, if you found value in this, please subscribe. Please like the video. I'll speak with you again soon.